Happy Sunday, everyone. Welcome back to Crypto Rosetta. Joe here. Now, some altcoins have continued to pump. As I mentioned in the last video, I did think that there was a high probability of that playing out. So well done to anyone who's made, some nice gains on any altcoins, especially over the last few weeks. That's been great. You may want to consider to take profits, or you may be, hodling, thinking that the bottom's in, continuing to dollar cost average. Of course, nothing I say is financial advice, but you've got to make your own decision. But well done to anyone who's made some gains anyway. Now we're going to take a look at some charts, which I think are important to be watching going into the next couple of weeks. But first of all, if you are new here for the first time, hit that subscribe button, tap the bell, select all notifications, go back and watch previous videos. We got a whole host of crypto content coming out daily. Now let's dive into the charts. So wanted to take a look at, first of all, starting today, total market cap. Again, mentioned previously, 2018 high support, for those who aren't aware, turned out to be the bottom of the market. Currently, we've bounced off that quite nicely, going all the way back to November last year. But where we are now, I still believe we're in a major resistance zone. Last time out, we are at 1.25 trillion. We've now continued to climb as more money is still coming into the market, and we're seeing bounces on altcoins now as Bitcoin consolidates. We're up to 1.29 trillion. Still think this 1.35 is going to be key to consolidate above before we've got a higher probability of a bull market. So I'm going to see if we even get up there, and if we reject from there, or if we just reject from where we are now coming into the next couple of weeks. Like I said, big times, high risk, high reward in the market right now. However, if we break down from this resistance zone, bearish targets you can look at, still potentially of the double bottom, which would come in around about 740, and then there's lower targets if things get much worse, uglier going into 24 25 on the macro, economically. And I think that the only way that these targets could be hit, will coincide with lower lows on the Nasdaq, the S&P 500, traditional markets. Of course, anything can happen in crypto. We know that all the exchanges are never safe. So you've got to be aware in crypto, you should only ever invest, no more than you can afford to lose. I know, and we always say that, and of course, a lot of people do and get caught out, unfortunately. But just be aware. So I'm not saying I'm expecting these targets to be hit, and if they are, it's going to take some time. But I'm more focused on now how we are going to react in this zone of resistance, which I believe we are in now. Looking at total two, this is crypto, not including Bitcoin. So this is Ethereum and the alts. This is looking a little bit bullish at the moment. However, we've got three green soldiers here, three very strong weeks. Really looking to see where this closes tonight. I think this weekly close is going to be, watched by many people coming back into the market who haven't really been focused on the market over the last few months, and certainly not the weekly closes. Now, first target is going to be 622, which was this July high. We are currently 605 at time of recording. So it's going to take a bit of a push to maybe get up there today. But if we have a bullish week next week, that should be the target to be taken out. Now that coincided with last time Ethereum was above $2,000. Obviously, Ethereum is currently below at the moment. That is really each next major target, which is again going to be psychological strong resistance. But if it can get above there, we should see this taken out. Next target after that would be 632, to basically try and get above this triangular wedge that we are in. And then again, I've got it marked up 700 billion. Altcoins bull market, higher probability in my opinion. But the warning will be if the bulls lose 500. Again, this target of 500 probably increase to about 530, 540 as the weeks go on. Obviously, the more time goes on, that the higher this line's going to get. But if we break this wedge to the downside, things could get really ugly. So again, just be aware of that. Now, also talking about total free and altcoins. So this is all the altcoins without Ethereum or Bitcoin. This is a little bit more exciting at the moment, and I think there's going to be a bit of hype about this. We can see that also similar chart in the triangular wedge. However, this one is actually breaking out now. And it looks like, unless something dramatic happens today, It looks like we are going to close a weekly candle above this now. That will mean that the next week or two, again, are key to see if it's a fake out and we come back in, or if we start to, break to the upside and head up back up to 400 billion plus. We're currently at 378 time recording. Now, again, it set some, higher lows, and we were setting lower highs, but again, we've now set a higher high, taking out the July one. Different to total two because, of course, Ethereum, like I mentioned, is still below 2000. However, I believe we've gone up here, especially, coins like Solana are definitely driving this one a lot. You can see obviously you were way down here when Solana was still in low double figures or even single figures. But now with the rise of Solana being one of the higher market cap altcoins out there, also seeing good rallies on Polkadot, on Cardano, etc. So they are going to be affecting this chart a lot. So the bulls will be targeting above 400, but until we really get above 457 again, that's more of the higher confirmation. I want to say get up there. I'm talking about genuine consolidation, folks. I'm not talking about just a wick up there. We can still be bearish. Again, if this breaks to the downside, I've got lower targets, but we don't really need to focus on those until we start to head down and set a lower low. So key weeks coming up. Now, before we move on, just wanted to talk about Cryptcomps. We've still got two competitions running at cryptcomps.com. We've got competition 8 where you can win up to £10,000 worth of cryptocurrency of your choice. Fantastic odds of winning on the site compared to other competition sites out there. There's also competition 9 where you can win up to £1,000 worth. It's cheaper tickets, so it's a lower price. But again, odds are very similar. Go check both of those out. You can enter from absolutely anywhere in the world, and you can also buy your tickets with fiat or crypto if you wish. No limit on how many tickets, how many entries you want to get into the competition. It's a skill-based competition. You've got to answer a question correctly with your tickets to be entered into the prize draw, and the prize draw is done completely randomly by a third party. So good luck to whoever wins the next competitions at cryptcomps.com. It'd be awesome if it was somebody watching this video, perhaps. So how cool would that be? Now, moving back on to the chart. So Bitcoin, no real change here from my last update. But again, for those that are new here, I still think there's just this bearish scenario potential on Bitcoin of the Wyckoff distribution schematic playing out. You get 3 drives to a high. We had that. You should break under the supporting trend line, ascending trend line, which we did. You should come back for a retest, which we have. The time that that's taken has meant that it's higher price action, which is not unusual in this scenario. Again, higher price action gets everyone really bullish, not actually realizing that we're just coming back to actually test a previous support, which has been lost, which was an ascending support. And then I'm expecting us to come back down to 31k in bullish or bearish scenario. I still think 31k is key area to be retested, but if that breaks, it's going to get bearish pretty quickly, in my opinion. We do have, distribution and validation levels, consolidation up in the green box here. So I'm not, just going to, hold on to this one forever. It's going to be key to see, first of all, if we can, close above this trend line and then, consolidate up here, which will be high 30s at the moment, around about 40, even the low 40k region. So watch out for that. Key weeks coming up on Bitcoin. Now, the Nasdaq, um, strong week in the stock market in overall. Did expect, I haven't this chart hasn't changed. I've got the parallel channel. You can see that we, came back down for our sort of second touch, which is coincided in our second lower low also. First touch being back here in August. Now we've come down again. So we were expecting a bounce. Didn't know if it was going to take a couple of weeks to play out. It was very aggressive. 5 green days, gapping up on multiple days as well. So super strong rally. But all it's done is taken us back into the top of the channel potentially, which is descending. So key to see what happens on Monday. Are we going to reject straight away tomorrow now and just it's essentially chop down in this channel? Could we also get a fake out to the upside and come back in? Again, possible. But first of all, for the Bulls, they've got to take out 15 free, which will be this high. Yet again, set a high rather for the first time for a while, and see how it reacts there. Again, not flipping super bullish until we get really back above 16k and take out this high here. If that happens, I am aware that there's a possibility this is a wave four, and we can break to the upside. So that's the bullish scenario I'm aware of, but I'm still tracking the bearish scenario as primary at the moment. Similar story on the S&P 500. Again, mentioned, this was a big warning breaking down here, came back in, got rejected, set a lower low. Now we've closed back in again, trying to get back in there. So there's a really good scrap between bull and bear going on here at the moment. The market is very volatile and very emotional in this period. And I think, again, I'm expecting that kind of sentiment to continue in the next few weeks. High volatility, high risk, high reward here, guys. So we need to, get back into this channel and really get back above 4544 and to be bullish again. Similar to the Nasdaq scenario, could be wave four in play, but not primary. Expecting us to break down, even if we go sideways for a few days and then come back. But we've got gaps to fill here, in my opinion. The purple channel, it's not a channel as such. It's just me kind of putting on the chart, kind of to show direction of where I think things are gonna continue. I mentioned 4134, get a bounce from there. We did. We literally just went wicked under and then we got a strong rally, right? But again, could it just be another lower high tomorrow? We'll confirm that or not. Just because if it goes higher here doesn't mean it's going to get super bullish. Like I said, got to take out this target 4544 first. Now, Dow Jones. This one's slightly different. This did actually set a higher high compared to the Nasdaq and S&P 500, but again, not super bullish until we get above 35,000. I still believe that these markets are in trouble, and the top was in the summer, which was just a lower top compared to what we set in November 21. All part of the multi-year bear market, in my opinion. We need consolidation above 36k to invalidate that. So things are looking okay at the moment, and I've got much lower targets down here, kind of primary in this sort of 28 to 26,000 region. 1-to-1 move would be down at 26.2. I'm setting a lower low, a multi-year bear market low. But again, I do think things can a lot worse, depending on how things go with inflation and economically next year. Oil, I just want to look at this one quickly because not a lot of channels out there. I've mentioned not a lot of people are bearish on oil, but we, called the top quite nicely on this one at 93. Again, setting lower lows, still looking to target $77. We closed at $80. Everyone was telling me that we'd be way above $100 again by now with what is happening around the world with conflicts, etc. I kind of, ignored that, ignored what the news was saying, just went with what the charts were telling me, and the charts look bearish to me. I still think that this was just a rally in a multi-year bear market also for oil. And yeah, targets of around 57 bucks is primary and could get down to 43, but 77 key first before we see a bounce. We can also just go sideways here, but we've got the blue line as the descending resistance, so not really going to flip bullish until we break above that, which would come with getting back above $90 again. Then maybe we could go back to three figures, but I'll assess that until that happens. Now, Apple is a really, key stock to be watching because, so much of the index, it was so heavily weighted on the index. The Magnificent Seven, the top seven stocks are really propping up the S&P 500. We are seeing all the other stocks collective outside of the Magnificent Seven are, going to lower bear market lows and getting annihilated still. So this is just something to be aware of. If these, higher market cap stocks come down, which I do think there's a good chance of happening, things are going to get pretty ugly on the indexes and traditional finance in general. So just be aware of that. Set a couple of lower highs, set three lower lows now. had the rally. However, again, if we roll over here, we've got question mark here. Is just another low high coming? But either way, I believe we're chopping back down to this long-term support line, which will come in about 153. I think we'll rally off there. But if the top is in again this summer, this is the all-time high on Apple, which was just below $200, $198 region. Once this trend line breaks, things could get real ugly fast. Could we see, a 50% correction on Apple, which would, go down into this $100 range? I don't think it is beyond outrageous to think that that could happen. If some people think there's no way it can happen, but just be aware, guys. Look where this thing's come from. Okay. You have to be aware that nothing goes up forever in these markets. I'm not saying we can't go and set another high in Apple, but one day it is going to pull back significantly. So if this tops in, then things get pretty bad going into next year. Just be aware. Now, DXY, again, this dropped more than I was expecting it to. But once I, reassessed the chart, we still had this 104.2 as support. I was looking for, us to consolidate above 105.50, and I still believe that if that happens, I still think it is going to happen, that the bulls will be in trouble. However, we've had it off sort of first sideways move to make that happen. Big daily drop on Friday, as the markets got really bullish coming in from that Fed news the latter half of the week, that there was going to be no rate hikes at current, and there's none guaranteed for next year yet. Now that doesn't mean that there's not going to be rate hikes next year. Again, be careful who you listen to and what content you take in. I've heard a lot of nonsense saying there's guarantees of this. There's no guarantees. Things can change very quickly, and they can decide to um, have further rate hikes next year. It depends on economic conditions, right? So looking to come down to 104.22. Potentially, if we continue to drop rather going early into next week. Also got support at 103. Don't really want to see us dropping below 103 to remain bullish on the DXY. However, you could argue that we can still just backtest the wedge and really hold above 100. Again, we get down here, everyone will be saying it's dead again, and we look what happens. So do not be surprised if we bounce off there. But primary, I'm looking for us to see if we hold 104.2 first. And then the next target of resistance, once we break to the upside, is going to be 107.9. That hasn't changed. I also want to just look at Nvidia again. This one is just playing out beautifully. Mentioned the diamond top reversal, which I think is just playing out perfectly. I do believe that the top is highly likely in for Nvidia. Now, again, no guarantees of this, but again, looking very overbought to me, around $500. And I was got this huge gap to fill, which I think we are going to come down to fill. I think we'll get a strong bounce off there, and then eventually I think we'll break all the way back down to $200 region for Nvidia, in my opinion. Now, again, we dropped out just as we should have following this pattern, and now we've just essentially come for a retest, and I think that's exactly what's happening. So this is the daily chart, key days for Nvidia. If Nvidia can get above 480, if it can get back above 480, then there's an argument that maybe this is more bullish and again targeting the highs. But at the moment, I think Monday, Tuesday, Wednesday, key days on the video. I'm expecting this to continue to the downside. I still think this 370 area is going to be a magnet to be retested, bounce off there, but then eventually break down to fill this huge gap that we've got there. So that's kind of what I think is going to happen in markets. But again, key to watch for the next few days. I think it's going to be another exciting week. I think it's great that we're getting a lot more engagement in the market, especially the crypto market at the moment. But again, we just have to be aware. A lot of people are coming back into the market. Again, a lot of retail coming back. You know what they usually say, when retail comes back and buys the highs or starts longing, a lot more volume comes in. Just be aware that if you've got in before, those people coming back in at the tops, maybe you may want to consider taking some profits or, start to close some of those long trades. Again, you've got to make that call deciding on what you're going to do, guys. Now, for anyone who's watching who's still completely sidelined in cash, who hasn't been, investing in the market, like myself, you may be getting worried and getting, a lot of FOMO. Again, what I'll say is that we've shown a lot on the macro charts. A lot of them are playing out nicely in bearish scenario, in my opinion. But you've got to decide when you're going to dollar cost average. But I wouldn't be buying green candles, even if you think you've missed the move and you're starting to believe that the bottom's in now. At least wait for a pullback. We usually say buy on red days, do not necessarily buy on green days. I'm gonna stop stack some cash. I'm happy. Like I mentioned on the total market cap charts, that if we get the consolidation above those high levels, and I believe that we've got more confirmation of a bull market, then I still think that's a better time to buy in on a pullback rather than still just gambling like potentially in the last few weeks. Now, if it is a bull market and people have gambled in the last few weeks and are hodling, you know, fantastic to them. I'm not going to say they just got lucky. I appreciate you've got to take a risk. You've got to have an idea of where the lows are going to be. But for me, again, just being a bit more risk adverse, I still think that there's, a lot of potential economic pain going into 2024. So that's why I'm more risk adverse and not flipping super bullish at this moment. I hope you've enjoyed the content. Like I said, if you have enjoyed this video, make sure you smash up the like if you haven't done so already. Helps get the content out to everyone else. Hope everyone's had a great weekend. I'll catch you throughout the week. Thank you very much.